All right, we are back for another short live stream show tonight. It looks like there is another bullish tailwind now for silver's new bull market. Silver is now closed above $18 for a number of days, so that is good. The gold to silver ratio is starting to come down substantially. It got as high as around 126 ounces of silver for 1 ounce of gold in March. It has now come down. I have the goldprice.org chart up here where you can look at for free the gold to silver ratio. It is right around 98. It was a little bit higher than that. Actually, it just dropped a tick below 98. It's moving back and forth as we speak. So you can look for live updates there on the goldprice.org website. So my friend Steve St. Angelo of the SRS Rocco Report, who covers miners extensively, similar to me, although he tends to look more at energy return on energy invested, and he looks at the cost of the miners a little bit differently than I do. He's put out two interesting silver articles in the last week or so. So on July 2nd, he put out world's two largest silver producers, mine supply cut drastically in April, and then on July 6th, he put out Peru's 2020 silver production down by 1/3 due to mine lockdowns. So let me read the July 2nd, 2020 article. With Mexico finally releasing its mine supply data for April, the top two silver producers saw their combined silver output decline by 53%. Pretty substantial number. So this is going to put a lot of strain on physical silver supply. There is not a massive above ground amount of silver, unless you believe what's actually in the SLV. I just interviewed Chris Marcus. I have to do some editing for that interview. Maybe I'll do that later. If not, I'll do it tomorrow or the next day. And he has a new book out about the silver market. It's available on his website on Arcadia Economics, also on audiobook on his website. The book is, let me just pull up, I have the website right here. The book is, okay, here we go. The book is The Big Silver Short, the shocking story about how the Wall Street banks have left the silver market in place for the short squeeze of a lifetime. And it features interviews with 15 of the world's top silver experts. So we talk about the book in the interview and also about the history of the silver market with the Hunt brothers and Warren Buffett. Again, that interview should be up hopefully in the next couple days after I get some audio editing done on it. So back to the Steve St. Angelo article from July 2nd. With Mexico finally releasing its mine supply data for April, the top two silver producers saw their combined silver output decline by 53%. To give you an idea of the amount of lost silver mine supply from Mexico and Peru, it was more than all of the global gold production that month. Actually, it was 1.5 months worth, it was 1.5 months worth of world gold mine output. According to Mexico's INEGI, silver output in April fell to 301 metric tons compared to 500 metric tons in March, so substantial drop. This turned out to be a 40% decline, less than my forecast, so Steve St. Angelo is forecasting 60 to 70% loss in production. The reason production didn't fall: mining is an essential business in many different countries. Without the tax revenues and cash flows from mines, the surrounding economies, and government tax revenues, then the math just doesn't work. So a lot of governments, foreign governments, figured out fairly early on in the global pandemic that if they shut down all the mines for a long period of time, there's no tax revenues coming in. And then the local economy surrounding the mine, so the restaurants and shops and other service sector jobs surrounding the mine in local towns so the mine is important to, not only does it have the manufacturing jobs at the mine, it also has all the service sector jobs in the town surrounding it. So without the mine running, those surrounding towns, those service jobs suffer tremendously too. So that's why the silver mining output did not decline nearly as much. Also with the copper miners, again, and I've said this a lot, they really don't care about the silver price. So the base metal and copper miners really don't care about the silver price. It's a byproduct to them, and they take what they can get for it, or if the bullion bankers will give them loans for it, or if Wheaton Precious Metals or Franco-Nevada or Royal Gold or Sandstorm Gold or Osisko Gold Royalty is willing to give them a stream for it, they would consider it. So they don't normally cut back a lot on their silver byproduct, which is the majority of annual silver supply. Silver is the only market. Most people don't know this, but silver is the only commodity market where by far the most annual supply is from byproduct. I think it's double the next commodity. I think silver is like 60, it's 2/3 approximately, depending upon which research study you look at, silver study you look at. But the next commodity I think is like 35%, might be uranium. Or a little bit lower than 35%. So it's almost double. Okay, so back to the article. It seems as if Mexico may have shut down a smaller number of silver mines than Peru. Peru's Ministry of Mines and Energy reported a 74% decline in the country's silver production in April. However, if we combine both countries, total silver output in April from Mexico and Peru was down 432 metric tons, or nearly 14 million ounces, and Steve San Angelo believes we are going to see similar figures for May. While Mexico didn't show as much of a decline as Peru, the combined silver production loss in April from these two leading countries more than surpasses world gold mine supply. Mexico and Peru versus global gold production in April. Mexico and Peru April silver production loss was 432 metric tons. The world estimated April gold production loss was 265 metric tons. In a previous YouTube video, Global Meltdown, Major Impact on Silver Investment and Market, he estimated, Steve San Angelo estimated that Peru would eventually lose 22 million ounces of silver mine supply, while Mexico would curtail 31 million ounces. This is the problem with the prediction business. When you get wrong, some people get angry when you try to make exact predictions like that. So I try to stay away, but it was obvious that mine supply was going to be cut, and now you have increasing investment demand on the demand side for silver. So demand, investment side, especially at the retail level, a lot of people are still stacking. Institutional level, according to Chris Marcus on that interview, institutional demand for miners and metal is starting to pick up too, surprisingly. Also, there's another article. I'll put it below the video here. I'm not going to read it. There's an interesting article, research article that came out from Sprott, from Maria Smirnova, Senior Portfolio Manager, on June 17th, about the industrial demand component side for silver. Consumer trends bode well for silver. And it's a pretty extensive Sprott article with a lot of charts and graphs with different trends. So I will put that below this video in the information and description section. Not going to read that one. But it is a very good in-depth article about the industrial demand component. So in the short term, the industrial demand component for silver is probably down, but this article talks about the long-term trends in place for increasing industrial demand for silver. Okay, back to this article from Steve San Angelo on July 6th. Currently, Peru lost 10.8 million ounces and Mexico cut 6.4 million ounces of silver production for part of March and all of April. If they show approximately the same figures for May, these two countries will have lost 30 to 32 million ounces of silver output, less than the 50 million ounces that Steve San Angelo forecasted in April. For whatever reason, Mexico didn't shut down as many silver mines as Peru, and I know many silver He knows many silver producers such as Pan American Silver, Endeavor Silver, First Majestic, and Fortuna Silver temporarily shut all their mines down in Mexico. Also, I think Peru, there was a forced shutdown. So Mexico did force a shutdown, but I think Peru was shut down longer. However, I did not see Fresnillo announce any closures, and they are the largest silver producers in Mexico. Also, I haven't, Mag Silver is the really big project. That's like the gem of the new silver mines. It's long life, low cost, high reserves, high grade. And Fresnillo is building that. So Mag Silver is not the normal junior where they're trying to build the mine themselves and betting the whole company on one mine. They have a really good partner, the largest primary silver miner in the world, developing the project for them, and they get to ride along as a joint venture partner. That's why I thought risk-reward wise, it was a good speculation when the stock was cheaper. And my Patreon account contributors, my over 1,000 Patreon account contributors, there was an article talking about Mag Silver and another silver mining article mentioning them too over the last couple months. There was a short list for gold and silver stocks in February and March, and then there was a silver miners update where I think I also mentioned Mag Silver about how I thought it was probably the best silver project I've seen in a long time. I've been doing this for over a decade now, and it's the best silver project I've seen on paper with grade, cost, long life reserves. Okay, back to the article. Okay, there we go. Okay, just last year, Fresnillo produced 54.6 million ounces of silver, nearly 30% of Mexico's total mine supply in 2019. Regardless, I imagine only silver mines around the world were also shut down during April and May, so we may still see 40 to 50 million ounces worth of global silver output lost during these 2 months. Lastly, when the nasty economic fundamentals kick in during the second half of 2020 and into 2021, Steve St. Angelo believes we are going to see severe reduction in global economic activity. Thus, demand for base metals such as copper, zinc, and lead will continue. This will be the second impact on world silver mine supply, as 55% comes as a result of base metal, of byproduct base metal mine. Actually, it's more than that, I believe. I believe it's more than that. So I'm not sure which research report or figures he is quoting. The other thing that's inaccurate, though, about that last part is the rally that we've had, because I just looked this up. I wanted to make sure I got the information right. We've had a really big rally in the copper price, which means that China, and I've talked about this, there's an extensive article about people asking me all the time about how to invest in different commodities. There's an extensive article behind the paywall for only $5 a month for my Patreon account contributors about all the different types of commodities. So for indexing with the Jim Rogers approach. So Jim Rogers has said in his book, Hot Commodities, the best way to play China was to have commodities exposure. So in my opinion, when you see the copper price rally, normally that means China's buying more. They're buying more to stockpile. They're buying more for infrastructure. They're buying more for speculative housing. They're buying more to put copper in a warehouse and leverage it up, collateralize and hypothecate and rehypothecate, all kinds of things. But the copper price, no matter why copper was purchased, the copper price has rallied a lot since March 22nd. I think its lows over the last 5 months was $2.08 a pound on March 22nd, and now it's up to $2.79 a pound. So it's at a very, very big rally. However, if the global economy does roll over, it could easily fall right back down. So if you bought the dip and you bought the rallying copper miners, you might want to think about hedging positions, in my opinion, or taking some gains off the table. And the second article was from July 6th from Steve St. Angelo. Peru's 2020 silver production down by 1/3 due to mine lockdowns. The world's second largest silver producer saw its mine supply fall by 1/3 due to lockdowns stemming from the global contagion. When the Peru Ministry of Mines released its metals production figures last month for April, the country's domestic mine supply fell by a stunning 74%. Then on July 3rd, Peru released its production figures for May. While the decline in Peru's silver mine supply in May wasn't as bad as April, it was still down 66% the same month last year. Peru's silver production fell to 85 metric tons in April and 116 metric tons in May. If you see the chart here in the article, the Steve St. Angelo article, the chart will be below the video after it's over in the information and description section. It's a very big drop off. From 313 metric tons in February down to 215 metric tons in March, down to 85 metric tons in April, and it's starting to rally in May up a little bit to 116 metric tons. The data from Peru's May Mining Statistical Bulletin shows that during the first 5 months of 2020, January through May, domestic silver production is down 485 metric tons, or 32%, compared to the same period last year. Already, Peru has lost 15.6 million ounces of silver production in 2020. Which makes me wonder, if there was so much investor demand for physical silver in February, March, April, and May, and the mine supply collapsed, where did the silver come from? So this is the paper price manipulation. People the silver market's not manipulated. Let's see if people took delivery of some of those COMEX contracts, how long it would take them to get delivery then. Probably wasn't immediate delivery, based on what I know about what happened in 2008 and 2009. Because the silver production mine supply fell off a cliff, and the SLV was claiming that 300 million ounces of silver was coming in over the last 4 or 5 months, some enormous amount. I don't know if I believe that. Chris Marcus and I discussed that in the interview that I did earlier today, and again, I have to edit it before I release it. If Peru's down 32% compared to the same period last year. Already, Peru has lost 15.6 million ounces of silver production in 2020. If Peru's mining industry totally recovers for the remainder of the year, the country's silver production will not be able to make up the losses from March to May. Peru's silver mine supply peaked in 2017 at 142 million ounces, and if they totally recover from June to December, production will be 108 to 110 million ounces. The problem with maintaining high mine supply is you have to keep, this is why mining is such a difficult business, you have to keep reinvesting into the mine. There is a lot of maintenance capex, maintenance capital expenditure bills. There is a lot that has to be spent on exploration. There's a lot of retail investors out there that don't understand how difficult mining is and think that reserves can magically be replaced and that miners can magically generate fairly easy margins by buying and holding. This is not how things are in real life. Mining is really, really tough. Maybe the toughest business in any industry. It can generate cash flows when things are working right. It can generate good margins and free cash flows maybe for a short amount of time, but not consistently over full lengths of the cycle. Through bull market, bear market, sideways, rising costs, miners struggle with a lot of different things. Okay, that's it for, there's a little bit more here in the article. In the second half of the year, especially in Q4 2020, we're likely to see a great deal of economic trouble. According to the article on CNBC, 30% of Americans missed a mortgage payment in June. With the second wave of the global contagion hitting the U.S., states are now reversing their opening up the economy. The other part here for copper and silver is China. So again, a lot of commodities, whether that's energy, food, metal, a lot of it's dependent on China. So how is the Chinese consumer doing? How are Chinese manufacturers doing? It's dependent on China. So if copper price falls, again, that would be good for silver. A lot of silver byproduct could come offline, in my opinion. We have not seen that yet. I think we've seen a little bit. I think annual copper mine supply, I think, barely increased. Let me see here. Okay, this article is from agmetalminer.com, June 23rd. Global copper mine production rises 0.5% in Q1. So it was barely a rise. Okay, so let me take a look at the super chat questions, and then I'll end this short show. I have a super chat from Dmitry Shmerkovich. Thank you for the super chat. He is also a Patreon account contributor, one of over 1,000. And I only charge $5 a month. There is a lot of global macro research there behind the paywall about the euro dollar, about the banking system stuff, about the one-time partial Ron Paul audit. There's a lot of stuff behind the paywall. Also articles on a lot of royalty and streaming companies, the silver mining industry, and a number of gold miners like Barrick Gold and Newmont Mining. Also, there's a uranium article about the risks in the uranium market and a lot of oil articles over the last couple months. My goal is to put out 1 or 2 good articles per week for Patreon, for my patrons. Okay, so let me get to the question. Sorry to promote my patron a little bit. Jason, what is your opinion on first Majestic Silver, Wheaton Precious Metals, and Anglo Gold? So I got a message from another patron asking about the PE ratio, price to earnings ratio, about Franco-Nevada. And I've written articles and articles and articles, also free lectures about this, talking about how these royalty and streaming companies are growth companies. And if they're growing their revenues or growing their cash flows every couple years massively, the valuation is justified. Because the market loves how these companies keep adding more diversified cash flow. Look, Apple is not really growing that much. So someone was comparing Apple, the PE ratio of Apple, to Franco-Nevada. Franco-Nevada over the next 5 years is going to grow a lot more than Apple Computer. How many more unless Apple Computer somehow comes up, Apple somehow comes up with new products and services, a whole new market where they can sell hundreds of billions of dollars worth of sales, Apple's going to struggle with growth. Franco-Nevada, there's lots of deals to be made for Franco-Nevada. They already have a lot of investments, new cash flows that can come online. They have they have gold and silver byproduct streams from base metal miners that they could purchase for more growth. So Wheaton Precious Metals is in a good position along with Franco-Nevada. First Majestic Silver, I've written about articles for my patrons there. Dimitri, I've talked about that. They have 2 good mines that I like and other assets I do not like. So I have mixed feelings about First Majestic. Do I think the stock will still go up? Yes, but I think they need to buy a 3rd mine, in my opinion. They need a 3rd mine. Anglo Gold Ashanti, I have not written an article about it, but I did see some really good news from them, and that is they are out. I think they sold their last asset out of South Africa. I was always worried about their geopolitical risk. So I think now that they're fully out of South Africa, they have really de-risked their geopolitical profile, because that company, Anglo Gold Ashanti, I think originally almost all their mines were in South Africa, and then they saw the writing on the wall 10 years ago that mining costs were going to rise, that the mining unions were striking for higher wages, even if metals prices crashed. And I was reading articles from about gold miners and platinum and palladium miners in South Africa, where the mining unions were demanding higher wages when the metals prices were crashing and the miner was close to filing for bankruptcy. Again, that didn't make much sense to me, but that's how a lot of these unions unfortunately work. So the company is about to go out of business and you have the unions demanding higher wages. It just didn't make much sense. And for years now, for a decade in South Africa, and I don't want any exposure to mining in South Africa. I don't trust geopolitically anything there for mining. They've talked about potentially confiscating the mines. So I think that is good news for Anglo Gold Ashanti. I think they sold their last South African mine to Harmony Gold. But again, I haven't looked extensively at the company, so that might be a project for me to take a look and write an article for my patrons. So Wheaton Precious Metals, I would expect Wheaton Precious Metals and Franco-Nevada, Sandstorm Gold, Royal Gold, the next round of deals. Probably in the next 6 to 12 months, probably pretty large deals for more cash flow. Again, these are growth companies. I think that's the mistake people make because I've heard it for 7 or 8 years now. Franco-Nevada's too expensive. Look at the PE ratio. And all they do is just grow. They add more cash flow. It's a cash flow growth machine. This is not Tesla Motors here with a joke of a valuation. This is a company that has 90% gross margins and keeps growing cash flow almost every year. Okay, super chat from Jonathan Howe. Thank you for the super chat. Any idea why PSLV 5 years performance is 5% lower compared to SLV? Liquidity. In my opinion, it's trading liquidity because the high frequency trading computers prefer a more liquid trading vehicle. And SLV is quote unquote more liquid than Sprott's Physical Silver Trust. Also, Sprott's Physical Silver Trust, is newer than the SLV. So for a longer term investor, if you want to lock in lower long-term capital gains taxes, if you're not trading it, PSLV is, in my opinion, way better than SLV. If you are a hedge fund manager and you are judged each day, each week, each month, each quarter by producing returns, and you don't care about long-term capital gains, and you need liquid trading vehicles for your high-frequency trading algorithms to go a bet on silver going up and down, SLV is better for you. So it really depends. So traders prefer GLD. The short-term oriented traders and high-frequency trading hedge funds prefer GLD and SLV. I do not like GLD and SLV. They are meant for paper price trading vehicles with enormous loopholes in their prospectuses. And you don't, if you are a buy and hold investor and you just want to buy one of the more units of these trusts on dips, you want to accumulate, you don't get any long-term capital gains tax benefit by buying and holding GLD or SLV. So in my opinion, the relative premium there for SLV is on liquidity. There's a liquidity premium. In general, I think Wheaton Precious Metals is a lot safer than First Majestic Silver because Wheaton has a lot more sources of diversified cash flow. But the management team at Wheaton does like to use leverage on the balance sheet. That's the one thing I don't like. They also have a lot of their revenues are from Vale in Brazil. So ultimately, over the next, 5 to 7 years, I would like to see management team diversify cash flows away from Vale as a counterparty and away from Brazil. But the business model allows for more diversification. But the companies, the royalty and streaming companies, for the business model to work right, you have to get to a certain size. You have to have a certain amount of cash flow, and you have to have a certain amount of diversified cash flow first. Someone asked me about Metalla, a Patreon account contributor. There's lots of articles about Metalla behind the paywall. I mentioned them extensively in articles about Franco-Nevada, Sandstorm Gold, comparing the companies. let's just say I don't like Metalla, but there's tons of articles to read about. They're mentioned in lots of articles behind the paywall. I'm not a fan of Metalla at all. I've never been a fan of Metalla. I've warned people about Metalla. I think they have very aggressive marketing. Okay, well, that's it. I don't see any more super chats on this live stream show. I want to thank my Patreon account contributors. Over 1,000 now, it's growing. And my monthly PayPal contributors, and people will tip me once in a while. You can go to my website and tip me a one-time tip through PayPal, or I accept the top 6 cryptocurrencies. Also, as of now, I will be on George Gammon's show again tomorrow. I'm not sure what the topics are. He didn't tell me yet. But I will be on George Gammon's show again tomorrow. Not sure when the interview is coming out, and look forward to that. On the kick-ass YouTuber, George Gammon, if he is listening to this live stream show. Because he said he likes that nickname. Excuse me, the ass-kicking YouTuber. I said it wrong. Okay, everyone, bye for now.